All the way from Australia, senior market analyst at Capital, Kyle. Always good to have you. Recently, gold prices rose strongly on the back of that decline of the US dollar we were just talking about, and renewed expectations that the US Federal Reserve will potentially still cut interest rates this year. What do you see? Do you see this as a healthy trend?
I see still very constructive fundamentals for gold. I mean, if you sort of outline, what I've kind of described as the 5 factors for gold throughout 2025, you're talking about monetary policy, also threats to Fed independence going forward. There's fiscal conditions across the globe. US trade policy throughout the year has been a very strong driver, and there's also been geopolitical risk, of course, because of the issues in Eastern Europe and the Middle East as well. Some of those factors have diminished a little bit throughout the year, but I think what's really driving gold going forward is what I would describe as the run at hot trade. Like you noted, interest rate cuts, and Danny noted as well, of course, interest rate cuts being priced in, not just in the United States, but around the world, but chiefly in the United States. It could see the federal funds rate at around 3% next year. But on top of that, rate cuts that are coming on in an environment of still elevated inflation, and with what I would argue are upside inflation risks because of the absolute deluge of fiscal policy or fiscal spending that we could see from the US government, but also governments in Japan, or the government in Japan, as well as major governments in Europe, chiefly Germany as well. So effectively, and going back to that kind of notion of a debasement trade, precious metals is very much of this expression of very, very deep fiscal spending at the same time as interest rate cuts. And for me, notwithstanding a fairly overbought market on a technical basis, still augurs very well for the outlook for precious metals and gold in particular.